Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto. Today, I am here with Joe Nikruto. Joe, how are you doing? Joe, I'm great. How are you? Joe, I'm terrific. Couldn't be better. Today, we didn't want to leave the week, rather brutal week, for the bull camp and flat price in our commodities here, and didn't want to leave the week without a quick update. We've got quarterly grain and stocks and an acreage report on Monday at 11 a.m. Central Standard Time. Let's talk about those numbers. But before we get started, we wanted to let you know that if you're interested in hearing about grain market movement strategies daily, you can sign up for our Ag Hedge Hotline hosted by expert market strategist Ted Seifert, totally free, and gives you the chance to connect with us personally if you have any specific questions or general questions about agricultural markets and commodities as a whole. If you're interested in learning more about how price action works and how to make price action work for you, it is a perfect way to take a first step. Link is in the description below to sign up for that. Totally free, zero commitment. With no delay, let's jump right into next week's quarterly grain stocks trade predictions. The averages for corn, 4.641 billion bushels. That range was 4.473 to 4.798, rather wide range. Karen Braun mentioned when posting these trade averages. In beans, you've got 980 million. That was the trade average. The range, 950 to 1.130 billion bushels. In wheat, the number came in at 0.836 with a range of 0.805 to 0.852. For United States planted acreage for 2025, corn, the trade average came in at 95.35 million acres. In beans, they're looking for 83, or the average is 83.655. And in wheat, slightly higher than March, 45.438. So with those averages and ranges, we look for, we wonder where the surprise might be. Very potentially high impact report. If we do get a surprise, all eyes will be on that report. Happens Monday, 11 a.m. Central Standard Time. Brings us to this week's action, which was not great for folks looking for higher prices. Almost across the board, weakness, and some of it rather pronounced. We opened the week with December corn at 444. The high was 444 and a quarter. Low trade I saw was 419 and a quarter. Last trade 427. Corn, nice short covering, maybe rally here today, but still left the week down 14 and a quarter. Funds now estimated to be short at least 215. My guess is that number's bigger. 215,000 contracts. That, I'm not sure if that's a record, but that is rather large at this time of the year. Quick glance at a corn chart, which you can see on the screen there, is if you look at the December, brutal weakness, 3-4 days worth of, we came from about 443, 444 area all the way down. I think we took out, right, 420, that low at 419 and a quarter, bounced today back up to 427, but really not a whole lot to say here technically, just bad look in terms of price action. Nice that we came back. We'll see what Monday's information does for us in terms of maybe us clawing back. But this technical damage done on this chart leaves folks looking at weather, forgetting about exports, forgetting about the fact that we're moving corn so well through the system here domestically. That is a pretty brutal break. And we'll see if the funds want to continue to add to that 220 position, or if Monday's information should provide them maybe with a catalyst to cover. For wheat, we opened the week in September wheat, 583. The high was 585 and 3/4. Low 536 and a quarter. Last trade 540 and 3/4. Wheat down 42.75 on the week. Reading that number again, I believe I checked it twice before I stopped writing, but 42.75, might want to double check that. Bad week for wheat. Funds short 87,000 contracts. That number could be bigger. From the sound of it, the folks who estimate this fund trading activity during the week, saying that the funds who had been covering in the prior week were back selling again this week. So that number may be larger. Funds estimated to be short 87,000 contracts a week. There's another chart where there is really not a whole lot to say other than that is a bad look. We came from last Friday when we visited 587 in September wheat with some longer term 200 bar moving average there at 587, where we have promptly fallen from almost a rejection of that 587 price level, wholesale rejection. If you take this price action on its face, 540.75, I think, last trade in the day here on the day for September wheat. Not a great look. Below support. That support from the previous week was above the last trade or right at the last trade. All of the moving averages are overhead. We'll see what the market has in store for wheat next week. November beans opened the week 1065.75. High was 1067.75 with a low of 1013.25. Last trade I saw was 1024.75, down 36 in November beans. 1013.25 support. We closed over. I'm sorry, we were unable to take out that 1011.5. Let me look at my chart so I can get a better idea here. But that is a bright light for a market that came from a breakout last Friday to total fake out and break down here this week. But the fact that we couldn't take out that 1011, I think it was 1011.5 low, and we did close up at 1024.75. A quiet bright spot for a market that, in addition to all the others, has shown so much weakness this week. 1024.75. Maybe we've got something there. Funds long, estimated anyway, long about 40,000 contracts coming into the day. Soy meal, nothing great to say there. Opened the week 288.70 for August. The high was 290.25. Last trade 274. I'm sorry, low trade 274. Last trade 275.60. That's down 12.60 on the week. Funds estimated to be short 113,000 contracts coming into the day. That is a sizable position. Nothing on the chart says they're going to be forced to cover. No catalyst. So do they continue to add to that? Should we expect more weakness next week? Difficult to say, as they have, to the degree that they have pressed so far. You wonder, can they keep doing this? We'll have to show up next week and find out. Brings us to August bean oil. Opened the week 54.81. The high was 55.29. Low 51.51. Last trade 52.48, down 212 in the bean oil. Funds long 40,000 contracts there estimated coming into the day. Interesting that this market has moved into a gap left by that breakout or reaction to the renewable fuels news. We've got a gap to the bottom that is bounded by 50.81. The market was unable this week to get down to fill that gap with a low trade for the week at 51.51. Yet another positive light in a week filled with weakness. The fact that we have not been able to get down and fill that gap yet in bean oil, technically a positive sign. Takes us to cattle. Speaking of technically positive signs, weakness in cattle this week. We opened the week at 209.07.5 in August. Fat cattle, the high 213.67.5, low 207.70. Last trade 213.30. up 347.5 on the week, held the 50-day moving average just below the 18-day moving average. This week, we may have been litigating the idea that cold storage numbers were lower, cattle on feed numbers lower. Everybody knows, it's widely known that we have less animals now than we have had in years past. That is reflected in this major run-up in prices, but now could be some cracks in that armor. The threat of plant closing, which would certainly not be bullish, and animals may be backing up. Certainly discussion about whether or not there'd be some tariff impact, or how this cattle market was going to play out with high prices versus consumer demand. And we have seen pretty decent exports as well. So all that saying, today's price action, I think we ended the day up well over or over 4 full points. Could be that with the continued strength in box beef and maybe today's price action. I did not get a chance to see any cash cattle trade yet at the time we put this together, but it could be that up 4 was anticipating strong trade in cash cattle. So could be that we're at the beginning of answering those questions about whether or not we had enough bearish fundamentals to really continue this recent correction lower. Technically, we held that 50-day right at the 18-day. If we get closing out over that, we're above both the 10. We're almost above the 18, and we're above the 10. You don't have to be a market wizard technician to see this chart that maybe we have held this 50-day moving average and now are on the verge of moving higher. We'll show up next week and find out for sure. Feeder cattle, same story there. Open the week 301.35 in August feeder cattle. The high was 308, 12.5. Low trade 3 even 05. Last trade 307.90. That was up 545. Feeders are the leaders. Held the 50-day and above both the 10 and the 18-day. Feeder cattle, that chart looks like it's trying to recover and maybe take a run at that 315 high. We settled the day 307.90. 315 is the round number overhead on my chart. We'll see how that plays out. No question of the week. We've all got questions. If you have questions and you want to be part of the question of the week, market related or otherwise, be sure to send us a note. We want to thank you for listening to the Zaner MarketCast today. If you need more because you just can't get enough of us, you can follow us on Facebook at Zaner Ag Hedge or on Twitter and LinkedIn at Zaner Group. If you have a question you'd like answered on the show, there's a link for you in the description to do that. Follow the instructions and we'll answer your question on air. Thank you again, and be sure to like, comment, and follow the podcast to not miss a beat. And we'll be back with you as price action develops. Everybody have a great weekend.